Hello and welcome to Investing Confidential. I'm going to try a new format here just because I think it'll take me less time to produce these things. I'll get more content out. And I think I'd rather just focus on what's going on today and interpret really the lies and all of the nonsense that investors are hearing every day from Wall Street, from the financial press, and just try to give you an insider's view and really what's going on. So let's just jump right into it. I mean, these are articles taken from Wall Street Journal, Financial Times, Bloomberg, all of the big guys. So the news today, you see, as you can see here, I mean, everyone's bullish. Okay, people are piling into stocks and stock and bond funds. The key word is funds. Okay, folks, because what's happening today is that Wall Street wants you and wants everyone to put money in a fund. Okay, they don't want you buying stocks. They want you to put money in the fund because if you buy stocks, you're going to pay no commission. If you buy funds, you pay them fees. And also buying the funds allows them to continue to manipulate the S&P 500 because, as I said before, the S&P 500 is everything. It's keeping the economy up. It's keeping Wall Street in business. It's keeping the White House. It's political. Okay, without the S&P 500, everything would collapse. Everything. The S&P 500 means everything to the powers that be. Okay, and that's exactly why you should not be buying funds. But look, today the markets keep going up. The S&P keeps going up, and until it cracks, it's going to keep going up. Would I buy it today? Absolutely not. Well, absolutely not. But the fund flows are just incredible. People have bought into the bullishness. People have bought into the fact the economy is going to go up forever, which is not the case. But look, that's the reality. So, you got to be very careful. And so, as you can see here, real quick, everyone's bullish. All the Wall Street banks, they're all bullish. Look at their target prices. They're all bullish. These are recent target prices. They've been lifting target prices for the last 6 months. Now they're all bullish, with one or two exceptions. They're all bullish. So normally, when everyone's bullish, it's time to be real cautious. Okay, second here, this is a journal. I mean, talking about the favorite recession indicator is not working. This is the inverted yield curve. I've talked about this for a year, and it is. Despite what the journal is saying, it is a great indicator. The problem today is we have two economies. We have the economy for the elites and the S&P 500 and the VCs and the private equity. And then we have the economy for 90%, 80% of the populace in this country. The 80-90% of the populace is in a recession. The 10%, the elites, the people that own the S&P 500, but that's not you, folks. Not you. That's the elites. They're having a great time. Okay, they can put money risk-free at 5%. They can make 20% on the S&P 500 year after year after year. They got a lot of money. Real estate's going up. They own most of the real estate. You guys rent. They own, and things are great. It's a shiny apple that's core, that's rotten to the core, but it looks really good. So this indicator that has been a leading indicator for recession for 100 years, more than 100 years, is again being manipulated by the S&P 500, believe it or not. And so the numbers, which I have shown you in the past, are fake numbers, not accurate numbers. They show we're not in recession. But everyone who listens to this, the 80% or the common working man in this country, knows that we are in a recession. We're in stagflation today. And it is a disgrace that they can sit there, lie right to your face, and then tell you, hey, you got to buy stocks, buy the funds. Okay. Here's another headline. Again, this is complete. This is a planted article by Wall Street and real estate. They're telling you that many stores have gone bankrupt. Many companies, many small businesses have gone bankrupt, but they go bankrupt and boom, another business takes a store. Well, I don't know how many are in New York, but if you are in New York City, walk up and down Madison Avenue and Lexington Avenue, the two streets that run parallel to Park Avenue. And every other storefront basically is empty. And it's been empty for 3 or 4 years since the pandemic. Stores are not, there's no new stores taking the place. Now, downtown Manhattan, a little different story. You've got more activity down there because all the young people live down there. But in Midtown, where the new Wall Street is, where all the companies are, all the businesses are, it's a ghost town. The only activity there is from migrants who are now piled high in the abandoned Roosevelt Hotel. Outside of that, it's a death zone, zombie land. So this is a planted article making you think that there's not going to be a real estate crisis, when all the numbers are pointing to that we are on the precipice of a massive, massive real estate collapse. Because today, folks, companies are still paying their rent, but the offices are empty. And a company that has 3 or 4 floors, and I'm talking about city companies now, are not going to take the 3. They're going to take, when the lease is up, they'll take 1 floor. When leases come up, nobody is renewing. Nobody. 100% of every company, when their lease is renewed, they will not renew in the current terms. So the collapse of the commercial real estate market in places like New York, which is the second largest contributor to the New York City GDP, it's over. And these articles are fake. They're false. And they're lying to you. Absolutely lying to you. Okay? And now we got something that's really interesting. So today, you're not going to know it, but because they don't talk about it, but we're moving to what we call T+1, meaning you buy a stock, you settle immediately. Now, for those of you who have Robinhood accounts or online bank accounts at Morgan Stanley, whoever, this is not really affecting you that much because your money's there already. But in the past, right, when you bought stocks, you had to send money in. You had 3 days to send money in, no longer. And you know what's interesting? The last time that Wall Street had T+1 was in the roaring 20s. But yes, the collapse, the biggest bear market this country's ever seen was after the roaring 20s when we had this T+1. So everything's lining up, folks. We've got a recession coming on. It's fake recession, fake not recession, who knows? You got Wall Street now trying to make things, with all the technology, trying to make things quicker to make more money for themselves, right? They want your money. They're going to tell you, hey, if you want to buy stocks, you got to have all your money with us. This is why they're doing this. Okay? And look, it's they want your money. It's a money grab. It's for them. Do you think this is good for the customer? Of course not. This is good for them. Okay, very good for them. And finally, just a couple of really interesting, again, these are all today's news. Mortgages are not coming down, folks. They're not coming down. Rethinking the American dream was damaged and destroyed after 2009 when the government turned their eye and allowed the Blackstones and the hedge funds to buy up all the real estate. I've been talking about this for months. I'm not going to go into it. You want the evidence? Send me a message and I'll reply with all the evidence. So the amount of real estate owned by hedge funds and these guys is massive. And now you got mortgages stuck at high levels because inflation is not coming down and the banks don't want to take risks. They don't want to look, when mortgages stay high, what does that tell you? That means the banks don't want to lend. They don't want to lend. If they wanted to lend, they lower the mortgage rates. Okay, mortgage rates are not set by the Fed. They're set by banks, mortgage lenders. If they wanted to lower rates, they would, but they don't want to do that because their buddies on Wall Street want you to rent. Okay, that's why rental construction is booming. This is why everyone is moving into buying and renting, buying, because they do not want you to have the American dream. Their plan is going to fail. I'm telling you right now, their plan is going to fail. But that's the reality. And as you can see right underneath, home prices keep going up. And it has nothing to do with more buyers and sellers. It has to do with there's just no inventory. People are locked in at low rates. So why would you bring down the mortgage rates? You can't. Because if you do, people are going to start moving again. And they're going to create more supply, which will bring prices down. They don't want prices to come down. The big hedge funds want to keep it up there. They don't want to mark to market lower. They want to keep these prices high. So no supply, mortgage rates high means prices could keep going, squeezing higher and higher. And it's not like there's a lot of activity. It's low activity. But if somebody buys a house at a higher price, boom, it gets stuck and it goes into the numbers. But this is all backfiring in their face because it's also keeping inflation higher. And then you have the biggest bubble of all, private credit. Okay, private credit. This basically is after the bank failures of the financial crisis, all the hedge funds went into lending because what did the banks do? Banks had problems. They stopped lending. They stopped lending to small business. They stopped lending to private companies. They'll lend to big companies. They'll give billions of dollars to a public company. They don't want to lend to small business. Okay, small business, as we talked about, it's the lifeblood of the economy, medium to small businesses. So what this article is basically saying is there's such a bubble in private credit that they're just paying anything they can to anyone with any kind of experience in private credit. It's a boom. Again, this is a Wall Street fictitious business. This should be a banking business. Nope, it's unregulated. A lot of this stuff's off balance sheet. It's unbelievable, absolutely unbelievable. So another bubble is about to bust. When? Well, he never knows. And finally, I mean, we talked about this whole EV scam. Again, this is another Wall Street made up nonsense. Okay, you take Tesla out of the case. Tesla is a business. Okay, Tesla came out before anybody realized that, hey, if we build high-end cars, electric cars that are cool, that are fast, we can get people to buy them. We can make a lot of money, and they've made a lot of money. But then the government, with this whole climate change philosophy, has decided that every car, everyone in the US should drive an EV. And without thinking about the infrastructure it takes to have everyone driving it and the cost and everything else. They're just morons. These government people are absolute morons. And now, again, another fake article saying, oh, EV sales are down, but it's just a blip. No, I'm sorry, it's not a blip. People, the common person, if you've driven, look, I love EVs. They're really fun to drive. But for everyday use, completely impractical. As a third car, great. If you have two working people in the third car, it's wonderful. So as usual, for all you investors, stay away from EVs and be careful out there.